If you run an LLC, an S Corp, or a sole proprietorship, 2026 is going to be a big year for your taxes. In this episode, we're going to look at what changed in 2026 and what you need to do about it. The One Big Beautiful Bill Act made the QBI deduction permanent and also raised it to 23% effective in 2026. It restored the 100% bonus depreciation, and it kicked off some new crypto reporting rules that could flag you if you're not careful. In this episode, I'll explain what changed, who benefits, and the exact moves to make before you file. So here's the plan. We'll take a quick look at the One Big Beautiful Bill Act. We'll look at the QBI deduction. Remember, that was raised to 23% effective in 2026. We'll see what's new and who qualifies. We'll look at the changes in the 100% bonus depreciation and the Section 179 limits. We'll look at the 1099 rule changes and also the crypto DA 1099. Then we'll look at a 6-point action checklist that you can use today. Congress passed the One Big Beautiful Bill Act in July of 2025, and that made the QBI deduction permanent for pass-through entities. It also restored the 100% bonus depreciation and expanded it to manufacturing facilities. And then it also introduced new crypto reporting rules through Form 1099-DA. So let's start with the QBI. Under the One Big Beautiful Bill Act, the QBI is permanent. There is no sunset in 2025. Also, the deduction jumps from 20% to 23% starting in 2026. There's also a minimum of $400 deduction if you had income of over $1,000 and you had material participation in that business. There's a wider phase-in range that begins at $75,000 for single and $150,000 for married filing joint. So that means that more owners will qualify. So let's look at who qualifies. So proprietorships, partnerships, LLCs, S corporations, those are all the normal entities that you would think about when you're calculating your QBI deduction. But don't forget about your REITs and your publicly traded partnerships. Those may also qualify as well. When you are calculating your qualified business income for the S Corps, don't forget that you must have reasonable compensation for your officers. And then also in the partnerships, you need any guaranteed payments do not qualify as qualified business income. Next, let's look at the bonus depreciation rules. The Beautiful Bill Act permanently restores the 100% bonus depreciation, but it also adds 100% bonus depreciation for manufacturing facilities. So typically a manufacturing facility or just a building, a commercial building, would be a 39% depreciation. Under the new bill for manufacturing facilities, that can all be taken in the year that it's placed in service. And then the Section 179 deduction, that limit has been raised to $2.5 million with a $4 million phase out. Now let's take a look at information reporting. Check your 1099 NEC and your 1099K settings because those limits have changed. And don't forget about your crypto. There are new requirements there as well. In 2025, you will get a 1099-DA from your broker that will report gross for your crypto transactions. The IRS has finalized its broker reporting requirements for 1099s related to crypto transactions. So you can expect all of your 2025 cryptocurrency transactions will be reported to you on a 1099-DA from your broker. For 2025, you will only see the gross proceeds amounts on that. In 2027, you will see your gross proceeds as well as your basis for all of your covered positions for cryptocurrencies. So my advice there would be just use the wallet-to-wallet accounting method for any cryptocurrency transactions that you have going forward. Other changes, the 1099 interest statements, you'll also see a better deduction for business interest, your 163J deduction that is calculated now, gone back to the old method of calculating it based on EBITDA. And also your SALT cap is temporarily higher in certain phase outs, in certain ranges. So here's your 2026 checklist. Make sure when you're doing your tax planner, your 2026, that you model your QBI deduction based on 23% and those higher phase-in limits. Plan your capital expenditures, remembering that you can take 100% bonus depreciation and higher 179 limits. Make sure you get those assets placed into service in the year that you want to deduct them. Go ahead and consolidate your crypto reporting history and get ready for 2027 when you will be reporting your basis as well as your gross proceeds. Also, if you have an S Corp or a partnership, check your reasonable compensation for the S Corp or guaranteed payments for the partnerships. Make sure that those are accurate because they affect not only your withholding and Social Security and Medicare, they also affect your QBI calculation. So just check those, make sure you're taking a reasonable compensation in those areas. And then when you're calculating your 163J deduction for your planning purposes, remember to use that EBITDA number. And if you want to make this really easy, just grab the 2026 tax planning workbook that we have attached in the description below. And remember that next week we'll be doing a deep dive into the crypto 1099 DA reporting. So subscribe, hit the bell, and drop your questions in the comments. Which changes affected you most? QBI, bonus depreciation, or the 1099 reporting? And we'll pay extra attention to those in future podcasts.